More and more property investors are buying property through limited companies, and many analysts have reported a massive boom in the number of companies being set up specifically to buy property. But is this the right thing for you to do? If you're watching my videos for the first time, my name is Hussain, and on this channel we have 3 videos a week to ultimately help you get further faster in your property investing journey. So what's the main reason there's this huge changeover into investing in property through limited companies? Well, if we roll the clock back, say maybe 10 years, most people buying property were buying in their personal names, and very few were buying through limited companies. But however, we've seen this massive shift, and the reason primarily for that is taxation. Property is a great way to make money, but ultimately we want to keep more of it in our pocket rather than end up paying most of it out in tax, which is what's happening for those that are structuring their property investments in the incorrect way. Previously, property investors would purchase property in their personal name, they'd take on a mortgage with that property, then they'd be renting it out, collecting a rent each month, let's say £500. They might have a mortgage to pay, let's say the mortgage is £300, and they're left with about a couple of £100 profit minus some expenses. And at the end of the year, they're paying taxation, primarily income tax, on that £200-ish times 12 that they've made over the year. However, what Section 24 has done, or the new taxation now, it means that we can no longer offset that £300. So effectively, rather than paying tax on, say, the £2,400 over the year, that the profit they would have made in that previous example, now they're pretty much being taxed on £6,000, i.e. £500 rent times the 12. Now, when you look at that, it makes no sense whatsoever. It's much higher. And now this is a very simplified, oversimplified view that I'm making here. But the point I'm trying to make is this is what's caused this huge shift. The shift into limited companies, primarily because this change means that in limited companies, we can still, right now as it stands, we can still continue to offset the interest as a cost, where we can no longer do in our personal name. This is what's caused this whole shift, and there's been this massive wave of moving across into limited companies. Now, some of the advantages, or that's the primary advantage, some of the other advantages of doing this, operating in a corporate structure rather than a personal name, is your taxation also will be corporation tax as opposed to income tax, so that's cheaper as well there. As you're probably aware, there's a massive amount of wealth that's kept in property, and also much of it is inherited down the generations. So often people are investing in property for the long term, so they would benefit, their kids would benefit as well. The inheritance process is much easier when it's in a limited company. So another advantage of having a property or properties in this structure. And the taxation is lower versus if it was in your personal name, having to deal with all the inheritance tax. Well, you don't deal with it because you're no longer here. It's the people that benefit from your wealth that have to deal with all that tax. So if it's so amazing and moving to limited companies is such a bed of roses, are there any disadvantages? There absolutely are. So let's now talk about those. There are a few downsides that you need to consider as well with regards to incorporation operating within a limited company. One of the primary ones are taxation or double taxation, where you're getting taxed more than once. The company, when it makes money, it'll be paying tax there, which is corporation tax. But remember, it's a separate legal entity, and when you want to take the money out for yourself, you'll probably extract that via dividends, and then you're being taxed on your dividends as well. So hence double taxation. Other things to think about is the compliance side. The legal costs are higher. In terms of setting up, when you're dealing with the solicitor at the beginning, you've got accounting costs, the administrative side of that business. Your accountant will probably charge you more than they would if it's a sole trader business, because they need to do a little bit more work as well. So generally there tends to be a little bit more administration. One of the other disadvantages are you'll probably end up paying a higher rate in terms of a mortgage product than you would if it's in your personal name. Now, over the last few years, there's been a huge change, and many more products are now available for limited companies than there were some years ago. So this is changing somewhat, but right now you're still paying a little bit more within a limited company in terms of the rates for that mortgage and the mortgage products. But as well as that, in terms of the setup costs, the product fees, because there's more work involved, there's a separate legal entity that the loan is effectively being made out to, there's personal guarantees, it also increases the cost as well. So there are a few different factors to be mindful of, because remember, if you're ultimately doing this for taxation purposes, you're setting up a limited company to save money, you've got to look at the big picture. You've got to look at the holistic picture, which is where many people make a mistake. So it's very difficult for me to say you should go this way or this way. Really what I want to do is educate you so you're aware of the different ways, and for you to then be able to make an informed decision. I'd strongly encourage you to sit down with a competent property accountant to be able to guide you through that, because you have to look at your overall income and not just your property income before you make these decisions. Now in a moment I want to talk about group structures and how they work and other factors you need to think about. But if you're enjoying this content, then make sure you smash that like button, subscribe to the channel as well, so then you getting these videos, enable the notification bell so you first to get these videos as and when we release them. Primarily, we've been speaking about investment property and buy-to-let businesses and building up a portfolio and incorporating that type of business. But if you're in property, and particularly if you're in property full time, it may be that you've got other activities as well. For example, you're buying and developing property, you might be flipping property, it might be you have a property management business as well. So some of these will fall under trading activity. And a mistake I see many people making is they set up one company and they put everything in that one company, and then they tend to struggle when it comes to raising finance, because the lenders want to see nice clean entities in terms of what's going on, the activities are within those businesses. And the way we set up our businesses, and I suggest you probably look at something similar if you've got a number of activities that you do within your overall business, is you set up group structures. So the way the group structure works, essentially you have, say, a separate company for your investment portfolio, properties that you buy to keep for the long term, that can give you a rental income. You have a separate company that you have your trading activities in, where you might be buying, developing, selling property. You may even have some SPVs, which are special purpose vehicles, which are companies set up specifically for a certain activity. For example, like one of the ones we're doing now, where we acquire a site, we develop it, we build some houses, we sell the houses, then it all gets shut down and wrapped up once that's done. So it's set up for a specific purpose and activity. But then you also may have management companies as well, like we have a number of property management businesses. So when you look at all that, these are all different businesses and you could all own all those individually. But the smart way to do it is you put them in a group structure by having a parent company that sits above them and they all sit underneath. Now here, this is why it's really important that you seek professional advice to do this. You know, I'm not a financial advisor, I'm not an accountant, a solicitor either. What I'm doing is sharing my knowledge and experience with you, again, ultimately to educate you so you have more understanding and you can make informed decisions what's right for you. And if you want some guidance in terms of a good property accountant to be able to help you, just reach out and we'll see if we can try and connect you with somebody that can help you with that. Another reason why you should not really just go and do this on your own based on just some research is because you've got to look at things like which is the correct SIC codes that you need to set up in a company, how's the share allocation going to work, particularly if you're setting up in a company structure. And this is where a good competent property accountant is worth their weight in gold, because they can help you set this up properly so that for the long term you've got a solid infrastructure to be able to build that business from. And also when it comes to borrowing money for your property deals, i.e. mortgages, that they're done in a way that's going to work really well and not cause you any issues there as well. If you do decide to go down the group structure in terms of setting up your business in that way, also remember your bank accounts that you'll need to set up tend to take longer as well, because the more and more complex the setup gets, the longer it tends to take to be able to get a bank account. So you need to build these time factors in as well. So this doesn't automatically mean that you should just go straight down the limited company route. The point I'm trying to make here is there's really a lot that you need to consider. And what I'm doing really is scratching the surface to raise your awareness on this so you can look at which is going to be the right way. Sometimes people have a hybrid, sometimes people transition between the two. So for instance, it may be that you've got some property in your personal name and you've also got some property within a limited company. And of course, as I said, you need to take into consideration where you are taxation wise overall within your business. And there are many people that have got larger portfolios in their personal name that in recent years they've started to realize that the taxation bills are going to be horrendous, and they've looked at solutions in terms of how they can resolve those problems. And one of the methods has been to really transition that business into a LLP, and then from a LLP into a limited company, so you're avoiding all the stamp duty costs as well in terms of and capital gains by doing those process, but that can be quite costly as well. And again, you need specialist advice in doing that, and if you need some help with that, I can connect you with experts who can help you with regards to get that process set up. So there's some people moving large portfolios into corporations, some people keep properties in personal name and in limited companies as well, and often people work in partnerships, so there may be different structures that may be relevant and suitable for you. I have a number of other videos as well, particularly around buy-to-let mortgages, whether you should use interest or repayment mortgages, and also generally buy-to-let as a business as well. We'll link some of those in the description below, so make sure you look out for those. If you've enjoyed this video even, make sure you let me know in the comment section below. Smash that like button, subscribe to the channel as well, because hey look, YouTube loves that subscribe button being whacked, and it means that more and more people get to see this content. And I'd really like to see and hear about how you're setting up your business and what your thoughts are in terms of the different structures people are using right now. So let me know in the comment section below, and I look forward to seeing you again on the next video.